Good morning. The Australian dollar was one of the major gainers on Thursday. It moved up to the 67 technical resistance, but of course failed to surpass, at least for now, despite Kiwi was mixed and also a rising US dollar. So Aussie is being fueled by record-breaking gold and silver prices, with gold holding the 4,600 level and silver prices nearing triple digits, and primarily though due to a fresh stimulus signal from the PBOC in China, in Beijing. Technically, though, we are at a critical junction because we're not just only facing short-term resistance at 0.67, but also the pre-war peak at 67.27. And that comes after what can be seen as a double bottom. Okay, so a rejection here could be dangerous in any of these levels because it could trigger, as we do, of course, follow now a divergence signal, double divergence on the daily, and we still didn't go to the RSI 50. Not mandatory, but still a dangerous head and shoulders pattern. And down on the 4 hour, you will see that is a bit more clear. You've got the head, you've got the neckline, and pretty much what could happen is if we fail to cross above the right shoulder, we could lose the 0.6660 and then continue to lower territories with first important level around the 66 handle. So China announced it will cut rates on structural policy tools by 25 basis points on January 19. Today, of course, is Friday, the 16th. That will be on the Monday. Okay. This is a direct support for the Aussie, for the Australian economy, and specifically targeting tech and agriculture signals that Australia, biggest trade partner, is stepping up its recovery efforts, which is a major, of course, tailwind for the Aussie, at least for now. So in terms of the commodity super cycle, gold is trading, as I said, 4.6, silver over 90. Central demand, central bank demand and safe haven flows are surging. As a commodity currency, the Aussie is catching a massive beat from this also mining boom, because there is a lot of M&A news coming out in the space. So they might be also supporting this narrative. Now, if we just recall quickly on the daily, we did have a divergence. We don't really need to go to the 52 reset. We are remaining on the daily on the top, on the upper cohort. So we are still bullish, biased bullish. Okay. But the critical level for me is the 67.27 or even the 67. Now, if we don't go up there and 67 holds, it's likely that we get either a move down to 60, 60, 60, 66, 60 and should higher, or we break that low, which means we'll have a head and shoulder most likely. If we hold here, if we hold, and even the previous high, even better, there is two scenarios. If we move up and we fail to cross above the right shoulder, then we would be looking at a potential triangle pattern. Okay, and that, guys, would be a running triangle, because the first wave supposedly is not the one that it's the peak. So it would be an A, B, C, D, and E, which, by the way, we could say that it's already there. But this could also happen, which means our triangle is here, A, B, C, D, and E, which means if this holds, we go up to the previous high. Okay, so these are pretty much the scenarios I'm looking at for the Aussie. The bearish scenario, of course, is the head and shoulders. The bullish scenario is a breakout. So if China and gold momentum pushes up, through 27, well, then we could just have that being a double top, and we would be looking for a potential measure move target as well, even above the head over here, right? Because this is a short-term target. So watch that 67 and 67.26 level today. It's very important. Is the line in the sun between a breakout to new highs or a reversal back to the mid-60s? Are you betting on the China stimulus breakout or fading the resistance? Let me know in the comments. And as always, trade safe.